Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar and this is effective for the week of December 16th, 2024. Let's get started. For the first time in a long time, or at least that I can remember for this year, our SEAF signals have repeated. We have not swapped anything out. Consumer discretionary, communication services, and technology are our signals again. These are the same signals from last week. Overall, though, seeing some positive things. Consumer discretionary has been strong. Communication services has been strong. We'll highlight that a little bit in the rainbow charts. Technology, a little bit less strong. As you can see by the scores, we have a really high score here for consumer discretionary at 4. Not to be overdone, but slightly trailing is our communication services. And obviously we have technology here at 14. Technology is relatively safe at 14, with financial seemingly trending in the wrong direction with a trading week of 9. Just kind of a little housekeeping regarding the SEAF model. SEAF model has done phenomenally well this year, up 25.19% through Friday, which is a great return for a given year. And the other thing which I think is equally as important to the return is there have been 3 outperforming sectors for the year. We're coming up on the end, halfway through December here, and our 3 outperforming sectors in the entire 11 sector spiders was communication services, consumer discretionary, and financials. Kind of digging through our numbers. I don't have a slide for this today, but just digging through our numbers, the top 3 returning trades that we've had for this year for SEAF were also XLC, XLY, XLF. So not only are we seeing some really good return numbers at 25%, but the sector rotation, even at that speed up nature, SEAF has identified the outperformers, and we have been participating in those at various points throughout the year, allowing for those 3 sectors to really drive the main portion of our returns. So it's a long way of kind of beating our chest a little bit and letting you guys know that SEAF is doing its job. It is identifying the outperformance in the market. It is identifying the sectors that are outperforming, and it is putting you in those sectors relatively consistently. So moving on to our heat map. Heat map is looking pretty solid. We have our top 3 relatively strong greens with our bottom at relatively dark reds. One key thing to note, and we've kind of seen this in the price chart of the S&P 500, which has kind of leveled off over the last couple of days, is we've had a net pullout of money coming from the 11 sector spiders. And, we like to treat those sometimes as an aggregate. So we actually saw a 1.5% outflow in the market last week, only having 1 day with positive inflows. That is not to say that, obviously we were seeing positive inflows in communication services, consumer discretionary, and technology, and but we are also seeing outflows in healthcare, energy, utilities, and financials. So on a broad basis, we're actually seeing money come out. That could mean various things. We're really heading toward the end of the year. We are, potentially some managers, kind of checking off some of their positions, tightening things up, making sure their numbers look good for their end of the year reporting. But overall, seeing a little bit lighter on the flows. Top flow this week was communication services at 0.29. Average for a good leader is 0.4. So just a little bit even lighter on the positive flows, though we did see nice, strong positive flows in these 3 sectors as well. Heading into our rainbow charts, wanted to highlight communication services here, and I'm actually going to bring up consumer discretionary because we're kind of seeing similar situations. As we've hit into our favored ranking for both communication services and consumer discretionary, we have seen a really strong relative outperformance versus SPY. Again, these consumer discretionary and communication services are actually 2 of the 3 sectors that have outperformed on the year, and we are really kind of catching that relative performance heading into the end of the year. So these are 2 good places to be, highly rated, or highly ranked, at 4 and 6 total ranking collectively here. So we have consumer discretionary at 4, communication services at 6, and we're just seeing some really nice positive momentum. We have accumulation of flows over 3 time periods, relatively strong as well. So we really have some nice cash flows at the back of communication services and consumer discretionary. Want to just, as I like to do, show you kind of the reverse sides of things. Energy, and the other chart that I have here is healthcare, continuing to struggle, continue to be avoids in the SEAF model. A little bit more pronounced relative underperformance here for healthcare, as it's really kind of gone straight down. Less of a steep decline here for energy, but having a real broadened underperformance trend, really going back to April of this year. So SEAF is telling you to avoid these two sectors at the moment. We're not seeing any relative outperformance here. Deep avoids on our rankings, so just places to not be. Like I said, SEAF is doing a great job of not only letting you know where to be, but it's also letting you know where not to be. So that is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.